Okay, good morning. Happy Monday, everyone. We're going to go through the stock market technical analysis. Guys, we've got lightning in a bottle right now. We are just knocking it out of the park in terms of calling these trade ideas accurately. So sometimes when you got it, you got it. And right now I'm on it. So if you guys are interested in learning about this as a skill set, I think the most important thing you can do is take my course, all right? I charge $99, not like a lot of the other guys charging $2,000, $3,000. I don't need, I don't need to make the money from selling courses, but I don't want to give it away for free. All right, my time's not free. And the thing is, it's accessible for all. I priced it so that if you can't spend $99 on a course to learn a new skill set, I don't think you have any business trading. Again, if you don't want to take the course right away, follow the videos, watch how I put these trades together, judge it for yourself. But I can tell you, I can tell you from experience and from a lot of subscribers who have taken the course is well worth the money, and it's a good value. Link in the description below. Let's get right into the market charts for Monday morning. I'm going to start off today with a little bit different. We're going to look at just some of the individual trade ideas. Then we'll go into the general markets. All right, GPL. This is this junky penny stock. It's a junk stock. Again, everything on this channel is just my opinion, and we're not investing, all right? We're not buying things because so-and-so's got a new battery technology or any of that, all right? This is merely technical analysis. We're using their charts to tell us where the probabilities of price movement are going to go, and we take trades on that. So GPL, again, downtrend line here. We had kind of this downward price action on the daily chart. We had bullish divergence on both momentum indicators, telling me that, okay, very high probability we're about to break out to the upside. We started to drift right in here. It looked like it was wanting to break, but nothing real definitive. This was probably our cleanest buy signal right here. And even if you wanted to wait maybe another day, but nice green break candle with follow through the next day. So that was basically our buy signal. From that point, it's pretty much just up ever since. You can see we're up another, about 5%. From the actual breakout point, and again, you probably wouldn't have bought it right here at the breakout point. So let's say you just waited to the end of the day. This thing is up 16, almost 17%, just a matter of a few days, climbing towards our target. Now, our target is this gap fill area right here, 36 cents, 36.16. And again, when you have a pretty clean level like this gap, you want to step in a little early. So we're not going to let it get to the gap. We're going to we'll close out the trade as we get close. Okay? So far, so good. I don't see any reason why we can't continue higher. Now, we're probably not going to just shoot straight there to the gap. There's probably going to be some sort of a pullback day. Maybe run up, then we get some sort of a big pullback day, shake out some of the longs, and then we'll probably run up and make that final move. So that's what I'm anticipating. Moving on. Okay, TSM. I left a comment in the last video that I did on Friday about this trade idea. It wasn't in the video, but there was a comment that I left right at the top of that video talking about TSM having a good sell signal. So on the daily chart here, this is a semiconductor. All right, we've been basically in this big sideways range for at least a year. And big support right there at about 108. All right, it's 107.93, but we'll call it 108. Clean and easy. Okay, we also have negative divergence. So you'll see here on this momentum indicator, see how basically we've been drifting lower on both RSI and the PPO. And we ran up right here and made a new high, but it was on lower momentum. All right, there's your former high, there's your momentum, there's your new high, lower momentum. All right, that's negative divergence. That tells me that, okay, this is likely going to get faded. So then what I was really watching for was a break of this key support level. I wasn't interested, you don't want to just short because you have negative divergence. And on Friday, we got that sell signal. Okay, there it is right there. Nice solid breakdown. This wasn't close enough of a breakdown. We were still too close to that key level. And they obviously snapped it right back above there. But on Friday, nice impulsive breakdown, closing down at the lows, near the lows of the day, and breaking that level. Today we've got follow through, more selling. So again, this is working, and it's continuing lower. This one's got a ways to go, guys. So I think we're likely heading down to this level here. We might find a little. There's a little bit of support right here. I can see a little bit of reaction right in here at about 95.50. We might hit that today. All right. and maybe we'll get a small reaction there, but it's not much support. So I would expect, us to head lower after that, down to about 76.33. Better support down there, and then, and then there's some more support down here at 60. So this one's got a ways to go, and we're just going to let this play out. Now remember, all these people here who have been buying the dip, all right, every time we dip to support, there's been buyers there, especially in this market. There's just, it's like they're programmed to buy the dip, because a lot of people trading in today's market have never experienced a bear market. So all they know is markets always go higher and go on to make new highs, so you just buy the dip. And so that's what they've been doing. They, you buy the dip at support, buy here, buy here, buy here. It's worked out for them. And right here, they were buying the dip as well. All right. So again, they have long positions that have been buying right there at support. Boom, we gap down and we break. So they're now all underwater. Everybody who was buying the dip and going long for over a year in this one is now taking on losses, and that's the fuel for our downside move. So I am looking for a pretty good sized downside move given this topping pattern that I'm seeing here. PAAS, this is a silver miner. I talked about the silver miners in my live stream that I did on Saturday. Guys, if you're new, I do typically try to do live streams around 9:30 Pacific time, right around there on Saturdays. And those live streams are an opportunity for all my subscribers to ask me questions about specific charts or stocks they want me to look at. So that's really the goal there. So join in on there. We usually go through a lot of really good content. All right, so I covered this one on that live stream, PAS, talked about how this looked like a really pretty good bullish set. It just looks really bullish. And all the gold miners, again, I've been harping on how these gold miners look like they're probably the best sector for a long trade. A lot of people have asked me, what I always cover a lot of short trades, and that's because I'm looking for this market to come down. But on the long side, the gold miners, all right, and this is a silver miner. It's kind of up it's pretty much the same as a gold miner. PAS, Friday we closed above the 200-day moving average. Today more follow through. Again, we had this downward pattern here with bullish divergence. See the bullish divergence? So we kept making new lows in price while momentum was moving higher. We then got a breakout of our downward trend line, and on Friday broke above the 200-day with a pretty nice impulsive close above there. So more follow through, looking good. This one, this one's likely gonna run. You're probably gonna run into a little resistance right up in this area. I've got that kind of marked out. Anywhere from about 28.36 to 29 should hit some resistance there. I think it will be short-lived, but I would expect a pullback, and then we'll probably, they'll buy that pullback, and we're gonna go higher. So I am looking for a longer-term trade on this, at least to the all-time highs here, up around $40, and quite possibly beyond. So we'll just keep an eye on it. And here's gold bullion, just to kind of cover gold in general. Clean breakout, nothing but really impulsive. So we're probably going to get a pullback and consolidation here pretty soon. All right, we are approaching the all-time highs. So, there's a lot of momentum right now. Maybe we're going to run up to the all-time highs and then get a pullback there. There's going to be sellers up there, right? At the all-time highs, they're going to see it as a double top. And so there's going to be sellers there. But what I would expect to happen, given the nature of this big sideways consolidation pattern that gold's been in for about a year, and remember, I wasn't owning gold miners and just holding these things long for the last 2 years, okay? I didn't start buying these things. I started nibbling on them back in March down here at support, and every time we were hitting support, I was adding to my positions. All right, so I'm not really buying these things now. However, we are starting this uptrend, and I will be looking to add on support. So if we run up to the all-time highs and get that pullback, I'd probably look at about 1958, 1960 as the level of support to probably add to a position. And I think we're going beyond the all-time highs here pretty soon. Qualcomm, all right? Qualcomm is, coming down to this gap right here. So look at the nature of what this market's doing, all right? Recently in Qualcomm, we gapped down here, and the buyers are right there. They bid it right up to, all they could do is run it right to resistance, and from there, the sellers stepped in and sold it right back down. We're back at the lows where it previously was at. We've got a gap entry right here at about 153.81, and we have the 200-day moving average. So big support. We're likely gonna hit it today, but 153.50 is good support for sure. All right, so I would expect at least an initial reaction on a tag of that 200-day moving average, some sort of a bounce, maybe to the middle of the range, about 164. But ultimately, I am looking for this to give way. All right, so keep an eye on how the price behaves as we approach that 200-day moving average. If we just slice right through it and just break down, then it's just showing you that this market is a lot more bearish than, at least this stock is a lot more bearish than we thought. All right, we've got profit targets here at gap fill, 139.12, should get a reaction there. We've got another level of big support right down here at about 123, all right? That's really good support down there. And then possible long-term target of 93.30. Okay, so that's what I'm watching on that one. Still looks good for more downside. Okay, I'm not long this stock, but if you are, it still looks good for more upside. This is KHC, Kraft Heinz. Again, we had some support here at about 37.82. We had a breakout, backtest, and we're continuing to trend higher. All right, this one looks like it's running up to gap fill, and that level is about 40, we'll call it 48 flat. All right, so there's a big gap from back in 2019, and it's pretty obvious that we're going to run up and fill that gap. So if you're long that thing, I would, in my opinion, I think it's still good. Again, this one came with some bullish divergence, and it had it way back here. All right, this is where the bullish divergence showed up, so kind of in this area. All right, so that's a potential long. If I'm not going to take it long here. It's already kind of started to run, so I just let it go. But if you are long, I just want to kind of cover that one. Okay, XLF. This is financial sector. All right, XLF has a key level of support, and it's right about 37. I noticed it. And just recently, and on Friday, we really were pivoting around that level too. So you can see all the little tags of that level that I have. There's another one kind of right in here. And then on Friday, they were, trying to hold that level. So far today, pretty impulsive breakdown, and we're, well below that level. So look for this to hold and this to stick. And if it does, that's a sell signal on XLF. All right. That should bring us down. We've got minor support. Well, we got some support right here. Next level of support about 35. Okay, and then we also have this uptrend line to watch. That comes back. That comes from your weekly chart here. This is kind of your 2011 lows. Here's a tag of it. There's support. We held it there. Finally broke. It was resistance. Then it was support. All right, so that would be a target. All right, that level right there, and it's about $33, $34, somewhere right in there. So that's where I think we'd be likely to go on a move to the downside. Okay, semiconductor. I already covered some of those semiconductors, TSM and Qualcomm, but this is just the SOXX. It's a semiconductor ETF. We're approaching support, which is about 435. Well, we got to narrow it in. It's right here. 430, we'll just call it 435, all right? You can see that was kind of former support right here. They held support here, they held it again, and we're back down at it. So I am thinking this is gonna break. Whether it happens today, I don't know. Maybe we park it here today and then gap down tomorrow or something like that. But this will really be the fourth tag of this trend line. And it does look like it's going to break. Again, we have negative divergence that was up here at the highs, so that was your divergent highs. We had a bearish rising wedge pattern, and we're breaking down to the downside. So ultimately, it looks like we're going much lower, down to the next level of support, 387.50, kind of this range right in here, and quite possibly a lot lower. But for now, we'll just watch this next level of support in this range. So you got to wait for this one to break here, as your next sell signal. But if you get a nice impulsive break of that, that's your next opportunity to add to a short position or initiate a new one if you haven't done so, in my opinion. Or if we bounce, any kind of kickback rallies to the trend line resistance is also an objective area to short at. Okay, PANW, more downside today. So you can see we're clearly just heading down towards my target right here on this trend line. Yep, so we're just going to let that do its thing. I don't see any indication why it won't. Now, we could have a kickback rally, they might step in and try to bid it back up to this resistance line, 570, 573. That would be the objective area to add to a short or take one, in my opinion, for a move down to the trend line. All right, so that's all possibilities. I see more downside in the near future. Again, this trade is already playing out. So I talked about how I was looking to trade it, and that is to, I shorted it right up here. We're looking for a move to the downside, down to the trend line. We'll cover the short at the trend line, so that means exit your position. And then the next sell signal will come on an impulsive break of the trend line, all right? That trend line comes off of, April 2020. You got support, support, support. There's another tag and another tag, all right? So an impulsive break of that would be the break of that major uptrend line. I think we are going to get it, but to play the trade safe, if we sell down, we'll take our profit, maybe let it do a little bounce, and then we'll wait for the break to re-short it, all right? That's how that one's going to work. All right, GameStop continuing to look like more downside. So again, GameStop, the big momentum play in GameStop to the upside, that's all finished. All right, I'm pretty sure we're done with that. And that all happened right in this area where this thing just went parabolic, and it was mostly a short covering rally while everyone was buying. The shorts were getting squeezed out. Okay, then and then you have the bag holders, right? And that's pretty much all the retail people who weren't buying it down here. The smart money was buying it down here. They sold out on this parabolic spike. The bag holders are these guys. Everybody who thought this was going to just continue to shoot to the moon and believed in all the hype and everything, the move was over. So now we had support right there at about 133. We broke support. As I zoom in, you can see we broke support here. Ran up for a back test. All right. That's where it got rejected. So again, all the people that are long in this area, they were hoping to get their money back. They see this rallying, they don't exit because they're close to getting their money back. And then we start to roll over. So they will become panic sellers as they see losses starting to build. And that should give us fuel to the downside. Next, I'm really looking for this area right here. I had it at 45, but I'm going to move it to right about there at about $40. Okay, that's a level where we had, a bit. That's basically where GameStop went parabolic, and then it came down and held that as support, for the next leg higher. So I'm looking for a move down to there. From where we're at right now, it is a drop of about 60%. All right, so we're looking for that. It still looks good. Okay, that's all I have for this morning. The trades that I've been calling out for the last couple of weeks are all working really nicely, so we're going to continue to let those work. And we don't want to get complacent, so we'll continue to watch for opportunities to take profit. And I'll keep an eye out for new trades, guys. Drop me a thumbs up on your way out. I do appreciate it. Catch you on the next one.